Hey everybody, it's the weekend, and so there's no market update. So I thought I'd just do just some insights that I have learned that I'd like to just share. And one of the things I wanted to share was how to generate an income if you have like a limited budget, or if you just want to create income instead of speculating on stocks that may rise or up and down. And so one of the strategies I really like is known as cash secured puts. You may have heard of it. If you haven't heard of it, it's a very simple concept. And the idea is that you will sell a put, but instead of putting up like collateral that you usually do when you do a credit spread, you're putting up cash, and the cash is the equivalent to the 100 shares of that stock price at a given strike price. So, for instance, if you were to do a cash secured put on a stock of, let's say, Disney, and Disney is at 135, and you decide to do sell the 125 put, then you would need the equivalent of 100 shares at $125 a piece. So you would need $12,500. Now, obviously, a lot of people don't have 12,500. So you can find stocks that are like at $10 and then do a strike price at 9, and then you only need $900. So at the end of this video, I'm going to recommend 3 stocks that you can use cash secured puts that fit a certain criteria that will give you a higher possibility of a profit. So now that we know what cash secured put is, let's talk about how to find the right stock to execute a cash secured put and the right strike price. Because what you want to do is, since you are selling a put, you want to make sure that the stock will move up or at least stay stable for a certain amount of time. You do not want a stock that is likely to move down in price. So how do you find a stock that is not likely to move down in price? Well, first you're going to want to find a stock that is above its 50-day moving average. When a stock is above its 50-day moving average, it usually means that it's performing really well, and you will be able to have a better chance that that stock is not going to fall. Now, here's one of the problems with a stock that's above the 50-day moving average, is that the price of the puts tend to be kind of cheap, and if you're selling puts, you don't want to be selling cheap puts. You want to sell puts that are a little more expensive. So how do you find a stock that's above its 50-day moving average and has the price of its puts are more expensive? You need to find a stock that's above the 50-day moving average and also has a high IV, or implied volatility. Usually a high IV is an IV level that's over 50, and usually a stock that is above the 50-day moving average and has a high IV is a stock that has recently moved up in price. So for instance, if you have a stock that's above the 50-day moving average and it's recently risen 7 or 8%. Now, these stocks, when they rise quickly, they tend to have a lot of options volume or increased options volume. So you also want to find a stock that's above the 50-day moving average, has a high IV, and then has increased options volume. So how do you find increased options volume? You just go to marketchameleon.com. They have lots of great free data, and you just find, you go up at the top of the page and you'll find a little tag there for increased options volume, and it'll give you a list. Now, you find stocks that move up, like I mentioned before, and that's the great thing about this strategy is there's always some stock that has moved up. I mean, almost every day, and at least it's almost guaranteed no matter what market you're in. If the market's down, let's say equity markets are down, like the S&P 500 is down, usually you'll have like commodity stocks they'll start shooting up because people want to put their money somewhere. So then you could look at doing a cash secure put on like a gold miner or a silver miner. So you want to look at stocks that have moved up, and more important, you want to know why it's moved up. You want to do a little bit of research. Like a great lesson that a lot of people have learned is the Nikola stock. That Nikola moved up like 40-50% because of the GM deal. But if you had done a little more research, you'll learn that a lot of Nikola, what they were making was vaporware, that their stuff, they haven't really created anything, and then the stock moved back down, and now it's down probably like 30 or 40% off of its high. So Now that you know what kind of stock to look for, you want to look for a stock that's above the 50-day moving average, that has recently moved up a lot in price, so it has a high implied volatility and therefore more expensive puts. Now you want to decide whether you want to sell the monthly or the weekly puts. Some stocks have weekly puts, most stocks have monthly puts. If you sell the weeklies, you'll be able to generate more money because you'll be able to sell options 4 times in a month, as opposed to the monthly stocks where you'll be selling probably one put a month. Now, you're going to want to know what strike price to put. Now, a lot of people get greedy and they try to sell the at the money put because that's a lot of money. However, if the stock moves down or begins to move down, that put's going to get more expensive and you're not going to be able to profit as much. So what I have learned personally, what I like to do personally, is find the put that is closest to the delta 30. And by delta 30, that means that that stock has a 30% chance of falling below that put price. And what I also like to do is I like to close or take profit when I get 50%. So let's say if I sell a delta 30 put and the price is $1, so I collect $100. I wait till that put has deteriorated to the point that the price of that put is 50 cents, or I collect $50 and then I close. Now, if you're dealing with stocks that are like at $10, the strike price may be at 9 or 8, and the delta, you may not be able to get delta 30. The delta may be at 20 or 15. So therefore, if you find a delta 20, you can now close that at 63% because that delta, that put is further out of the money, and that means you have a better chance of being profitable, but you still want to close early just to protect yourself, and you'll be able to take that money and then open another position because now you'll free up that collateral. And the thing about making money is you want to trade a lot. So if you can get out of trades quickly, you can free up that collateral and then find another stock to sell a put against. And then finally, if let's say if you're looking at a stock that's like priced at $5, the $4 put may be at a delta 15, so therefore you can close that at 75%. So what happens if the stock drops below the put that you sold? Well, the good thing about a cash secure put is that you don't have to worry about being assigned stock. I know that's a lot of people are afraid of credit spreads of being assigned. Well, if the stock drops, the stock is simply put towards you. So that means the collateral that you put up will automatically buy that stock, and then you have the stock at that price. And you know, in some cases, you still may be profitable if it didn't fall too far below your strike price. If it fell pretty far below your strike price, you do lose money. But the good news is that there is a way to get some of that money back, and by getting that money back is what you want to do is you can hold the stock and then do a covered call. Covered call. And basically a covered call is you, instead of selling a put, you sell a call, and the stock that you own is the collateral. And if the stock moves up, then you're called away. Your stocks are called away, and then you collect the money. You know, you get some profit. It's a way to recover some of your losses. So with that said, here are, oh, and by the way, just want to let you know that this whole process of selling a put and having the put towards you, and then you sell a call, this is known as a wheel strategy. It's a very popular strategy, very conservative strategy, and a great strategy to not only generate an income, but be able to get a stock that you want at a lower price. So the whole strategy is known as the wheel strategy. So with all that said, here are some stocks to look at. This is September 20th. So this is for the week ending. Like if you want to do a weekly cash secure put, I have 2 choices that have weekly stocks and then one stock choice that just has monthly. But here I just did some research and I found 3 stocks that I'm personally looking at doing cash secure puts. So the first one is GameStop, and if you follow my videos, you know I've been talking a lot about GameStop. GameStop has been moving big, moved up like 20% in the past maybe 3 or 4 trading days. And that is because of the PS5 launch, and then Microsoft is coming out with a new Xbox. So that means that GameStop is going to be getting a lot of business over the next few months and probably a lot of business over Christmas. Well, the great thing about GameStop is the price has moved up, which means the price of the puts are really expensive, and you can do weeklies or monthlies. So this is something you can definitely look at, selling a Delta 30 or Delta 20 on GameStop. The current price is $9.47. So let's say if you do a strike price of 8, you sell the 8 put, you only need $800 to open that trade. So that's pretty good if you don't have or don't want to use a lot of money. The next stock you should look at is Workhorse. Workhorse is a commercial electric vehicle company, and they've been moving up and doing really well. And I think part of the reason is because Nikola has been pretty much exposed as a fraud. The CEO is in big trouble. So Workhorse looks like it's going to become the Tesla of the commercial vehicle sector. And Workhorse is another stock that's moved up quickly, has very expensive weekly and monthly puts that you can sell. So you can sell, for instance, a 27 strike, and you only need $2,700 to open that one. And finally, this is a monthly play. Lithium Americas, it's been rising. This is a commodity play. They're a lithium miner, though I have to let you know that they do not have any revenue or anything. This is based on the fact that they just have lithium in the ground, and lithium batteries are part of the whole EV movement. So there's going to be a huge demand for lithium. So they've been moving up in price. That means their puts are really expensive, but just be aware they only have monthlies. They don't have weeklies. So I hope this has been valuable. I'm just going to recap the 3 stocks I mentioned: GameStop, GME, Workhorse, WKHS, and Lithium Americas, LAC. So I hope cash secure puts is something that you consider if if you're afraid of being assigned stock by selling credit spreads, and you want to look at a strategy that can generate money, kind of protect you on the downside, and there's some opportunity to make some excellent money. So if you enjoyed this video, please be sure to like and subscribe and turn on notifications. I come out with videos before market opens every weekday, and on the weekends I'm going to do just one educational video. So I hope this helped. Alrighty, thanks. I'll see you Monday morning. Bye.